Hello everyone and welcome back to my daily report market analysis videos with me, which is market analyst at Hantec on Friday the 20th of December. We're going to look at cable now, and if you look at cable in the last week, it is actually, I think, the biggest weekly decline you've had for possibly back to October 2016, incredibly enough. It is a very sharp decline that we have seen. I think it's back until this period here. I haven't done the exact look at it, but I think that is the case. Now, in that time, we've basically unwound 500 pips since that election result, which was basically Friday morning on the back of the UK election. There was a spike to 35.15, and then it's basically been in retreat ever since. And the driver of that retreat is this Boris Johnson decision, or the Conservative Party decision to try and put into law the departure date, where the end of the transition would be on the end of December 2020, and that has really hit sterling. 500 pips is a big decline, and there's a sharp retracement. You can see the size of this retracement actually, considering the move that we've had since early October when Boris Johnson first got that withdrawal agreement from the European Union. We've seen the market retracing already 38.2% fib of that. 30.10, $1.30.10 is that 38.2% fib retracement support. Interestingly enough, this is a confluence level, considering this is the breakout point as well of those October-November highs where the market really did take off. Now we've retraced all the way back to that. Now this is a key level, support. It is a support that for now is holding. The market is ticked higher today. You've had some fairly positive UK economic data this morning, but also you've started to see sterling just find a little bit of support. Now we did see this happen yesterday, and then on Wednesday into Thursday, and then the market started to fall back again. So it'll be very interesting to see how this the market now responds to this level of support around 30 big figure. 130.50 was a basis of support, which, having broken down, becomes resistance, and it's basically where we're testing at the moment. Reaction high yesterday, 131.30, adds to that resistance overhead. So you need to see above 31.50, I think, 31.30, which was yesterday's high, to really start to generate a recovery again. For now, the market is holding this correction, but obviously this is a wait and see mode, because I think you can see that you've got the momentum indicators on the RSI back towards that 50 point, which is where we saw the corrections or the little near-term unwinds back in November finding support. So if you see the RSI decisively below 50 in the mid to low 40s, then I think we'd see a continued correction. You'd start to think about the 50% fib level, because once you close clear of 38.2%, you look towards 50% as the next level. That's 28.50 area. And I think that that would be the start of a more considerable correction. But it just seems as though that the market is stabilizing to an extent today. On a broader level basis, I think once the market starts to factor in this disappointment, effectively, of or the hard ball that Johnson is playing with the European Union, I think you're likely to see sterling starting to find its feet again and finding upside. But for now, obviously, the momentum has been against it. But is this the beginning of a area of support? Would be the question. So with that in mind, I wish you good luck in your trading today, and I'll speak to you soon.